Right, let's talk about no deposit mortgages and whether they're actually a good idea. I'm Dan, the mortgage man from Holloway Mortgage Solutions, and there's a lender called April Mortgages offering a deal where you could potentially buy a home with no deposit at all. Now, that sounds great, but like anything in mortgages, there's a bit more to it. So I'm going to break it down in plain English, the good and the not so good. In simple terms, this allows you to borrow 100% of the property value. So instead of needing to save 5 or 10%, you could potentially buy with no deposit, as long as you meet their criteria. Now, in terms of who this is for people buying their main residential home. You will not be able to rent it out. And importantly, you don't have to be a first-time buyer. If you've owned before, this could still be an option. You can apply on your own or with someone else, and you'll need a minimum household income of 24,000. They will consider employed, self-employed, and even pension income, and in some cases certain benefits as long as they're consistent and ongoing. If you're employed, they'll take your salary plus around 80% of things like bonuses, overtime, or commission. And if you're self-employed, they use the lower of your recent year's income or a 2-year average. Now, there are some rules around the property and your age. It must be a house, not a flat, and it can't be a new build. The property price needs to be at least 75,000, and you can borrow up to 600,000. Age-wise, if you're applying on your own, there is no maximum age. But if it's a joint application, the mortgage must finish by age 80. In terms of how much you can borrow, it's up to 4.49 times your income. Just worth noting, if you did have even a small deposit, there may be other options where you can borrow a bit more. Now, one of the key differences with this mortgage is how the rate works. You're fixed in for either 10 or 15 years. So your payments stay stable for a long period of time, which is great for budgeting. Over time, the interest rate actually reduces slightly as you pay the mortgage down. But it is important to note these reductions are set at the start. So if rates drop in the wider market, you won't benefit from these during the fixed period. Now, let's talk about the positives. The obvious one is no deposit needed, which is a big deal for a lot of people because saving is often a big hurdle. You've also got that long-term stability, so you know exactly what you're paying each month, and you're protected if rates go up. There's also some flexibility built in. You can move home, overpay, or even repay the mortgage in full using your own funds without early repayment charges in these situations, which is quite useful. And because you're fixed for longer, you've got more time to pay the mortgage down, which can help reduce the impact of negative equity over time. Now, on the flip side, this is really important. There are some downsides. The biggest one is you're borrowing 100%, which means you're starting with no equity. So if house prices fall, you are more likely to end up in negative equity, where you will owe more than the property is worth. You're also tied in for a long time. 10 or 15 years is a big commitment, and if rates come down, you won't be able to jump onto a cheaper deal during that time. The borrowing is also a bit more restricted because of the 4.49 times income cap, so depending on your circumstances, it might limit what you can buy. Another important point is the rate itself. At the time of recording, you're looking at 6.65% for a 10-year fixed, 6.85% for a 15-year fixed, which is higher than some deals available if you do have a deposit. There are also some fees to factor in. There's a 195 application fee and a 995 completion fee, and in some cases you may need to pay those up front. And when it comes to credit, April mortgages aren't necessarily about having perfect credit score, but they are quite specific about the type of credit history they accept on this product. Rather than going into all the technical rules, just know it's something you'd need to go through properly with an advisor. What's my honest view? For the right person, this could be a really good option. If you've got a stable income, you can comfortably afford the payments, and saving a deposit is the main thing holding you back. It could get you on the ladder a lot sooner, but it's not for everyone. You need to be comfortable borrowing the full amount, understand the risks around negative equity, and be okay with being tied in for a longer term deal. At the end of the day, it's about whether it fits your situation. If you're thinking about it, or just want to see if it could work for you, feel free to drop me a message and book a call. I'll go through everything properly and help you decide what your best option is. I'm Dan, the Mortgage Man from Holloway Mortgage Solutions.